Hey-o. What's up, everybody? Hopefully you can hear me today. Right? Because, last time I started off the stream muted. I double-checked the microphone. Can everybody hear me? Yeah. Can everybody hear me? Testing. 1, 2, 3. Testing. No, I'm really not gonna, look, I don't fuck with like $1 million, $2 million market cap shit. So, I mean, the point of this stream is not to pump a 1 million market cap coin. I've said this before, and it makes a lot of sense if you really think about it. I mean, think about this. In today's environment, when things have been pumping for a month, we've been in alt season for a month, right? You find a gem that's $500,000 market cap, that's $1 million market cap, is that actually a fucking gem, or is it just dog shit? I'm kind of the mind that anything that is gem status right now, that you could actually assign that label to, it has already been marked up a little bit. It might be $10 million market cap, might be $15 million market cap. I don't know. I mean, there's not a hard number to that. But if you find the next gem and that shit's $500,000 market cap, I'd say 90% plus chance it's probably doo-doo and nobody wants it, and that's why it's a $500,000 market cap or whatever. It's usually a shitcoin. Yeah, okay, so fuck. Anyway, I was supposed to do this stream at 2. I went to go take my dog for a walk. Unfortunately, it's 30 degrees and raining outside. And normally I've got to walk her about a half mile. We come back, she fucking takes her shit, and we're good to go. But she decided that we were going to be walking 2 miles today without taking a shit. So I was soaking wet, cold as fuck. Come back inside. We're leash training her right now. So, she's got her choker collar with the martingale cinch on it. You give her little, corrective impulses and shit. And she's a great dog. I mean, I love her to death. She's a sweetheart. But this fucking bitch, she comes inside. I get her food bowl to bring it upstairs, because while she's leash training, she's always on her leash in the house. She's tied to my computer chair right now. So I wanted her to be able to eat, drink some water. While I was streaming, I wanted her to be able to poop before I stream so she wouldn't be waiting or whatever. So I grab her food bowl, and this motherfucker just decides she's gonna jump on my white couch. What the fuck? What the fuck? She jumps on it, and I'm like, hey! What the fuck are you doing? And then she's like, and she starts doing that dog shit where she's like, oh, I'm over here. Oh, I'm over here. No, I'm going to jump over here. Holy shit, we got 1,000 people live. I don't think we've ever had those kind of numbers before. Super impressive. But anyway, I just had to vent about that a little bit. Anybody that's a dog owner knows we love them to death, but they could just be the biggest fucking assholes sometimes. Don't love her any less. Don't love her any less, but oh my god. I literally, my blood was boiling. My blood pressure was up so much that my vision was blurry after that shit happened. Yeah, it was itchy mess. She went into the play stand on the couch, and she'd already, we've been walking around in the fucking mud and shit, and yeah. Damn. 1,000 people live. This is sick. Anyway, guys, so, I've been doing a lot of psychology talk. I think we're going to open up with some more psychology talk just because it's so important right now. Not a lot of people are talking about psychology. I can sit here all day and tell you guys, oh, this looks good, look at the fundamentals. But the reality of the situation is, none of this stuff actually really helps you out unless you're able to take this knowledge and apply it to your own trading, apply it to your own psychology. You know, crypto Twitter is literally fucking AIDS when it comes to psychology, especially if you are a newer market participant. I'm gonna turn the music down just a tad for me. I listen to the same music you guys do while I'm streaming, by the way. Love it. Some people are like, how do you focus? And I'm like, how do you not focus if you're not fucking jamming? But crypto Twitter is fucking AIDS when it comes to psychology. And, you know, and the reason for that is like, you know, you have a plan, like it's been 1 month of alt season, like new retail is here like crazy. Like I've got friends DMing me, like these were top signs last time, but they're not top signs anymore. It's just a new floor. It's a new level. Like we don't know what the top's going to be this time. We don't know what the top signs are going to be this time. You know, maybe government officials shilling crypto. I mean, who fucking knows? Who fucking knows? A country adding crypto to their reserves. Who fucking knows? But I mean, the thing is like, you look on crypto Twitter and there's actually people out there that believe that this is like too good to be true. You know, and I don't know what it is, you know, like, oh, we don't deserve to make this money. Like the bear market PTSD is real. And if you're not an experienced participant, you know, and that you're not able to form your own convictions, you know, you look up to people and you rely on them and their experience. So there's nothing wrong with that. I mean, I was like that one at one point. You go into crypto Twitter and it's just, it's Chicken Little, man. You know, the sky is falling constantly and people are so scared to give up, you know, what they've made just because the bear market was so brutal. I mean, that shit fucked with my head big time. You know, I have to have, you know, inner monologues daily, you know, with myself to try to remind myself that this is happening, you know, this is real. And for a lot of people too, you know, I think one of the biggest issues is, and I'm not saying, you know, all of you came into this cycle millionaires or whatever, but, you know, a lot of guys that came in 2017 now, you know, we were here through 2020. We all played that DeFi summer, or a lot of us did. We got a little bit more cheddar than we're used to, right? So you're just sitting there and you're just thinking in terms of the number. So maybe you came into this alt season with 100 grand and now you have 500 grand and you're like, I don't deserve 500 grand. Like that's insanity, you know, but you need to remember that in 2017, I mean, there's people that came into that alt season with 20 G's and left with millions. You know, at the beginning of that, nobody ever expected that to happen. I mean, come on. Nobody expected that to happen. Nobody knew that was possible, you know, in a full-blown retail mania. We're talking worldwide. Crypto is fucking hot. In a time where, you know, trading has quickly become like one of the hottest, most talked about, desirable professions. People are cooped up inside with nothing else to do. People have lost their jobs. They've turned to trading. So, I mean, the horde is here, guys. I mean, retail's here. They're new retail. We're all retail. I'm retail. You're retail. You know, when people say retail, just understand that you're retail. I'm retail. You know, even big fish are retail. Retail is just average Joes like you and me that are out here trying to make a buck. So, you know, we've got people though that are just looking at that number now, and they're like, wow, you know, that's kind of a big number. But you also have to remember, you know, think about the guys that came into early 2017. Like I played 2016 like shit. You know, I wasn't one of these guys. But there's people that like hit it big in 2016. Like there's people that hit it big in 2020 that came into that 2017 alt season with $1 million. You know, I doubt they kept most of it, but at the end they were like, oh my God, I've got like $90 million. Like this is fucking ridiculous. You know? Just like there's people that came in with 10 and we're like, oh my God, I've got $500,000. This is fucking ridiculous. So don't think of it so much in terms of like, wow, I've got a lot of money, I don't deserve this. You know, it's always smart to be moving from higher risk to lower risk, which is something I've been discussing. And lower risk could just mean, you know, a higher market cap. You know, it could mean, well, I know Aave is an outlier in DeFi performance. You know, this shit just keeps going up. It's super strong. Mark Cuban, it's got VC hype. I think they have like government partnerships and shit, which is kind of crazy. Moving from high risk to low risk doesn't necessarily mean moving, you know, from your shit that went 5x to a stable coin. You know, although that's certainly, you know, one thing you can do. moving from high risk to low risk just means moving to things that maybe are a bit more liquid, have a bit more interest. So be very careful, you know, when I was on crypto Twitter, and I always just get so frustrated with this shit, you know, because it's I don't like seeing it more than anyone else, and even as somebody with experience, even as somebody that has his own convictions, you know, I never buy somebody else's fucking research or somebody else's bag. You know, I'm 100% reliant on what I'm doing, my own research, my own convictions, right? 100%. And even somebody like me, you know, I'm crypto Twitter 2 days ago. I'm starting to ask myself, like, holy fuck, you know, like, should I sell everything right here? Like, the answer is no, you know, but it makes me have those conversations. So I know if it's making me have those conversations, like, there's guys out there that are losing sleep over this shit, that are absolutely shitting their pants. No, something really interesting that Loma Crypto, who's one of my favorite people on Twitter, has been talking about. If you guys don't follow Loma, he's a stand-up guy. You should be following him. But he keeps talking about the popularity of crypto derivatives this cycle. You know, you have these guys that are posting, and I'm not, you know, knocking these guys or whatever. You know, there's no right way to do this. But you got these all-stars, right, on crypto Twitter, and they're posting these big P&L screenshots and use my ref link, and, you know, when it goes down, buy more, and use this leverage, and, you know, a lot of people are doing that shit, and it hurts me to see, because, you know, you really don't need that. You know, altcoins are leverage. Don't let anybody tell you altcoins aren't leverage. Altcoins are leverage. You know, the only reason you're in altcoins is to outperform Ethereum, essentially, you know, and the only reason you'd be in Ethereum was to outperform Bitcoin. So you're pretty much double levered at that point. You know, you're not only relying on Ethereum's performance, you're relying on your shitcoin's performance, you know, relative to Ethereum. There's no need to lever up on these altcoin positions, you know? Like, if you have $5,000 right now, like, I'm just gonna reality check you. The odds are you're not going to walk a millionaire this alt season. And if you do walk a millionaire, it won't be because, you know, you YOLO'd so hard on leverage and blah, blah, blah. If you walk a millionaire, it's just because it was meant to be. And you were smart, and you didn't get liquidated, and you didn't get rugged, and you didn't lose your money. You know, if this shit sustains for 3 or 4 more months, who knows where you'll end up. One of the things I was also talking about yesterday was setting realistic expectations. And those realistic expectations are, you know, you have to, within reason, think about, okay, what kind of expectations should I have when I look at my portfolio right now? You know, is my $5,000, is my $10,000, how realistic is it that I might walk with $1 million? Well, probably not very realistic, right? You know, like, let's not kid ourselves. Unless you are lucky, you know, win the lottery, and there will be people watching this that do win the lottery. You're not going to win it, you're not going to be trying to win it, you're just going to win it. You're going to stumble into it, you know? But setting those realistic expectations is important. You know, because if you have $5,000 and you get it in your head that you're going to walk a millionaire, then that's going to really fuck up your mental game. You know, you're not going to be able to move from these high risk to low risk. You're not going to be able to secure the bag. You're not going to be able to take profits. That's going to really fuck you up. So realistic expectations. That's a really hard topic here, because, you know, you'd ask somebody that's not crypto native, that doesn't have alt season experience, what's a realistic expectation? Well, maybe you could turn your $5,000 into $10,000, right? Well, that's not realistic either. Like, come on, this is in the middle of, you know, presumably the largest retail mania that we've ever seen in crypto. You know, that expectation would be too low. You know, to an outsider though, they might say 2x, are you nuts? 2x in 3 months? Like, that's outrageous. You know, but to a crypto insider, somebody with experience, you know, they might look at that and they would say only 2x? That's outrageous. So maybe if you have $10,000, you know, maybe your expectation would be that you get $50,000, you know, by the time it's all said and done. And you get this by being smart, you know, by preserving your capital, from moving from high risk to low risk. You know, maybe your expectation's 100. But anybody here that turns, you know, $5,000, $10,000 into $1 million, and I'm 100% certain that there are people watching this that will. Most people not. You know, there's 900 people right now. I'd say maybe 1 or 2 max will do this. So don't kid yourself. But those people that do this, it's not gonna be because they're savant level or you know, they tried so hard. They're gonna stumble into it. You know, they're gonna get lucky. So set those realistic expectations. It's extremely important, you know, for your mental state. It's extremely important also to know that no matter how educated, you know, somebody is in this, they're not going to be able to call the top. Even I can't call the top, and I've been here for quite a long time. So don't kid yourself into thinking that you're going to be able to call the top here. You know, that you're going to be able to walk with literally, that your portfolio, ATH, whatever that ends up being, don't start kidding yourself into thinking that, you know, that's what you're going to leave with, you know, unless you hit a certain number and the party's still going and you say, damn, you know, that 50K can pay off my student loans. Like, crypto just changed my life, so I'm out. You know, I want everybody to really think about that for a second, you know, because the goal is here, you know, not to retire. You're not going to retire here unless you came in, you know, with a significant portion of money when this began. But you can change your life. You know, that's why we're all here, right? We all want our lives to change. You know, maybe, like I said yesterday, maybe that's you got your bills on auto pay. Maybe that's you pay off your car. Maybe that's you pay off your house. Maybe you got a down payment for your home. You know, you can get your family a house. Maybe it's you pay off your student loans, and now all your income you make from your job is going to your bank account. You know, it's shit like that that can really, really get you ahead in life. You know, don't expect this crypto shit to just like, hey, in 4 months, I'm never working a day in my life again. You know, that's a really, really unrealistic expectation for the vast majority of people here. But can you change your life? Absolutely. For a lot of people, 20K would be life-changing. You know, I worked my way up to 5. If I could get 20K, have that in the bank, that'd give me a lot of runway here, you know? I could feel comfortable. All my bills could be on auto pay. I could, you know, go to the grocery store and buy my groceries without worrying about how much they cost. Like, that's a lifestyle upgrade. So set your expectations on, you know, what in your life can you solve? What problem can you address right now if you thought about it? Man, if I didn't have that debt, my life would be so much better. That should be your expectation here. And I would encourage everybody, because like I said, you're not going to sell the top. I would encourage everybody that when you have the ability to you know, remove some of those pain points from your life, to do it, and do it while you can. You know, do it while you can. Because could you actually live with yourself if, you know, you had that opportunity and you decided that you were going to be greedy as fuck and you let that opportunity slip through your fingers? You know, could you live with yourself a year from now if you're still making those student loan payments and you said, you know, fuck, like, if only I had just paid that off when I could? It's super important, and I hope you guys really take this to heart, and I hope you guys listen to this, and I hope everybody here, you know, is able to have this mentality and is able to do these things, you know, that will change their life. Because, you know, like I said, that's why we're all here, right? You know, Stillman made the analogy that this, you know, alt season is like a bank heist. And it's so true. You know, alt season started in January. And people say, oh no, alt season's been going on since 2020. No, it hasn't. You know, those were sector pumps. Not everything was pumping then. Alt season started early January. It's been going on for about a month. But when alt season started, that silent alarm at the bank tripped. This bank has infinite money for us to rob. Infinite. The issue here is that at some point the police are going to show up and you're going to get arrested. So how much money can you take from the bank and get away with before the cops show up? You know, that's the $1 million question, really. Because they're coming. Trust me, they're on the way right now. They're coming. But it's going to take them a second to get here. We don't know if they're going to be here in a week, in 2 months, in 4 months. But rest assured, they will get here. They will arrive. And there's going to be people that rob the bank and they say, "Damn, I robbed the fuck out of this bank, you know? This is nuts. I'm out of here. I did it. I got away, you know, I pulled off the heist. They're never going to catch me." And there's also going to be people here that get busted. "Oh, that's not going to be me." Huh? Well, if you're not prepared for it, it's going to be you. You know, you have these goals, you know, and what's going to happen is, you know, everybody's realistic goal that you have right now, I would bet that you hit it. And then you're going to say, "Well, you know, I've got $50,000 right now. If I could just get $100,000, my life would change even more. So I'm not going to pay off that student loan." And then you're going to hit that one. "Oh, fuck, now I've got $100,000. All right, well, I'm a genius. I'm going to go for 500 grand now." You know, eventually you get busted. So it's important to know what that number is that can change your life, and to be very, very disciplined about, when I get to that number, I'm not going to move my goalposts, you know. I'm just going to change my life, simply put. And that's all I'm going to do. And yeah, of course, you know, people with 10 mil are looking for 25. It's never enough. But the idea here is to manage what you are looking for relative to the amount of time that could be left, you know, based on these market conditions. Right now, I don't see any reason why the music stops for at least a month from now. You know, I'd be very surprised if it did. You know, I'm looking at all these charts versus BTC right now, and I mean, a lot of them look very, really bullish. So, you know, I'm of the mind that, you know, hey, I can have a goal, you know, I think that I can walk with like 3 to 5x of my current portfolio balance from here. Based on everything, you know, the 3 to 5x makes a lot of sense. I think that that's pretty reasonable. It's not an outlandish expectation. And when that happens, then I'm yield farmer supreme. I'll probably remain 15-20% exposed to Bitcoin, Ethereum, shitcoins, whatever. You know, but knowing enough is enough. Eventually the cops are coming, and you know, you're gonna get busted and they're gonna take all your gains. So last episode, you know, we looked at some undervalued projects. You know, I found a gem-ish that I've added. I've talked about it a bit on Twitter. FNX. It's FinNexus. It's around a $10 million market cap, I believe. You know, it's an options play. I'm super bullish on options plays. You know, big believer in Hxro. I think, you know, you guys have seen the hype that Premia generated. You know, Premia, of course, had a beautiful user interface. A lot of hype behind that. You know, they launched at a really, really good time. So there was a lot of people that FOMO'd into that initial bonding curve offering. Messi, why didn't you buy Premia? Why aren't you in Premia? Well, you know, the user interface is nice, but the true innovation in the decentralized world, you know, at least from a trading perspective, in my opinion, was the automated market maker. market making's hard. You know, it requires sophistication to do it properly. And, you know, we saw exchanges like IDEX exist for years and years and years and, you know, get some degree of traction, but we really didn't have a killer app in terms of a decentralized application, you know, until we had Uniswap, right? And Uniswap didn't invent the AMM. You know, I think Bancor did. Uniswap just made the AMM accessible. You know, they mainstreamed it. They made it easy. Simple user interface, right? But the thing is Uniswap also allowed anybody to be a liquidity provider for anything. And that was a huge innovation. Because market making requires sophistication, a level of sophistication that no one had to fill that void on IDEX, for example, for so many years, Ether Delta. And now all you have to do is just deposit your liquidity and everything's handled for you. You know, Uniswap opened up market making to everybody. So there's a lot of options plays out there, right? Octus, Premia now, Hegic, FinNexus. You know, the big thing and the big challenge that I see for a lot of these option plays is that, like the DEX plays that preceded them, a lot of these options plays rely on P2P market making. You know, they're expecting average Joes like me and you to be able to come sell these options to provide this liquidity. And in a P2P options model, you know, that's actually, in my opinion, even more difficult than providing liquidity on a DEX like IDEX. It requires even more sophistication, and we've seen that same P2P model, you know, in the DeFi world, fail to gain traction for years and years to years. And now you introduce a new P2P model that, you know, with even more complexity, that requires even more sophistication, you know, in terms of being a liquidity provider. I just don't see how that gets any traction at all. You know, so in my opinion, whoever ends up making it to the big leagues in terms of decentralized options, it's going to be decentralized options that are AMM based. Simply provide liquidity, and you've got an AMM that sells these options for you. Easy peasy. You know, if I look at Hegic right now, I can open an 1,000 Ethereum call for, you know, different periods of time with relative ease. The liquidity's there, right? I can actually, in FinNexus, which is one of the reasons that the FinNexus originally gained my attention, I can open an 1,000 Ethereum call too. They've got 10 million TVL. You know, one of the things that interests me about FinNexus relative to Hegic is FinNexus actually has more offerings than Hegic. It's AMM based, so we don't have that liquidity, that P2P issue. You know, it's not trying to do something that's already been proven does not work. And one of the interesting things about it is, you know, with Hegic, there's Bitcoin liquidity providers, WBTC, and Ethereum liquidity providers. These are the writers of these options. But those pools exist separately from one another. You know, with FinNexus, all of the liquidity is in one pool that they're calling MASP. It's a multi-asset liquidity pool. And all of the options are written against this multi-asset liquidity pool. Now, they're American options, just like Hegic. You know, they have to be exercised. There's no secondary market for FinNexus yet, at least. But I decided to give it a shot. You know, at a $10 million market cap, when you've got options protocols that are doing things that are proven to not work, that are in the top 200, and then you've got this at rank 700, AMM based with a novel AMM, you know, a novel liquidity pool. They've done tons of research, tons of modeling. You know, I look at the founder. The founder's got you know, big dogs following him. You know, important people. I'm not going to say their names just because, you know, maybe they just followed for lulz or something. But they've got the right people following them. And I just thought to myself, you know, fuck, I think this might be mispriced. Even if it's not the one that gets significant traction. You know, I compared the pricing of the options to Hxro, and the pricing was quite good. It's a Black-Scholes automated market maker. And I figured, you know, fuck it. This is mispriced. Let's go in, you know? Let's get our dicks wet. Let's see what happens. So for me, that's I'd say the one YOLO gym play that I have right now. And when I say it's a YOLO gym play, it's, you know, I'm in it, and I'm either going to 5 or 10x on it, or it's not going to work out. You know, it's the only thing that I'm in that would be around, you know, like a $10 million market cap or something like that. Pretty interesting stuff. Now, Hxro has some really cool things on the horizon. One of the biggest issues, you know, with Hxro has always been the pricing of the options, right? And that's something that will improve over time, you know, as we get more liquidity in these pools, more data, you know, new code, new shit like that. But one of the biggest issues, you know, for an options AMM, especially in a raging bull market like this, is people can just continue to buy calls, and your liquidity in that options AMM, it just gets wrecked, right? You lose money. So platforms like Hxro, you know, subsidize this with tokens. Our Hxro, it's a vested version of Hxro. But that's not a solution to the problem. You can't counter this impermanent loss with just inflation alone. So Molly has actually, the Hxro developer, has built out auto hedging for the options LPs, which I think is huge. I think it could increase the TVL on Hxro drastically. You know, make it so there's a lot more liquidity available. And also make it so, you know, the more liquidity would be available, because it's a more attractive proposition if, hey, I'm providing liquidity, but I'm hedged. So in a raging bull market, you know, like we're in right now, like I'm not going to lose, you know, 10% of my money over time or whatever by being a liquidity provider. Which is really interesting. So also, you know, another cool thing for Hxro, you know, that's been worked on is secondary markets, you know, for these options. You know, right now, in order to make money in Hxro, I have to exercise my option, which means that if I purchase an Ethereum call at 1800, Ethereum goes to 2000, I can then exercise my right to buy Ethereum at 1800 because I have that option. And then I can go sell it on the market for 2000, and I've made money, right? That's great. Fantastic. But in the normal options world, if you look at Deribit or something like that, I can actually trade the options. And that's big because I don't have to exercise them. I don't have to have the liquidity to say, I bought a call for 1,000 Ethereum at 1800, and now I'm going to exercise that at 2000. I don't have to say that. The actual value of my call would increase as Ethereum went from 1800 to 2000, and I could actually, without exercising, just sell the call, sell the rights. So that's something that Hetoro, Hetoro, has developed for Hxro. Is a secondary market for these options, and that's huge. You know, it makes these options a lot more attractive. It makes them a lot more appealing. So I'm super, super bullish on Hxro. You know, of course, we looked at a company, a website called Token Terminal. Also, yeah. People said, can you talk about White? So Whiteheart DeFi is automatic hedging for traders. You know, imagine having the ability to say, you know, I'm going to come in and I'm going to buy Ethereum at 1800 and my downside is hedged for the next 2 weeks. So that's what Whiteheart actually is I can come in and purchase Ethereum at 1800, and if Ethereum then goes to 1700, my downside is hedged. So I actually don't lose money for being wrong, which is really cool. It's also going to increase volume on the hedging platform. Stop that. So Whiteheart, there's 8,888 tokens, and as people come in and they use Whiteheart and they, you know, have these automatically hedged positions, it's built on top of hedging. As people come in and they have these automatically hedged positions, that'll drive a lot of volume to hedging. That'll increase the hedging revenue, which is already really impressive. You know, we looked at something called Token Terminal. No, you can't just sell the option straight up on FNX. There's no secondary market for FNX yet. Maybe one is in development. The main appeal on FNX is that they've got this novel liquidity pool, and it is AMM based. And they've done a lot of research. If you look at their Medium articles, if you pop in their Telegram, you know, they're very well educated. They know their competition inside and out. I was very impressed, you know, when I spoke with them. Very impressed. But you can't, there's no secondary market for FNX, you know, like there is for hedging. So you can't actually be an options trader, and, you know, to make money, you have to exercise. But super bullish on hedging. You know, all of this new stuff for hedging is going to increase liquidity, is going to decrease the price of the options, is going to increase revenue. All things that, of course, are very bullish from a fundamental perspective. I'm gonna go ahead and switch over to desktop here. You know, there's a site called Token Terminal, which I've actually grown quite fond of. Let's see. Token Terminal. All right. And Token Terminal, what it actually is, and you can read right here. Token Terminal provides access to standardized metrics that enable users to easily quantify and compare the performance of different crypto protocols. Now, why this is important is it gives you a way to compare the fundamental value. Is my hair sticking up back here or something? This is driving me nuts. All right. It actually gives you the ability to compare the fundamental value of crypto projects on a relative basis. And that's really important when you're crypto investing, because you have to be able to look at the market and you have to be able to see, you know, these other projects and how these other projects have been valued from a market cap perspective, from a price perspective. And then I can also look at other projects and I can say, well, based on how the market has priced this other thing that, you know, I know has product market fit, I know is really fucking right now, you know, has gotten a lot of traction. I'm looking at this over here, and this may be significantly undervalued compared to this other thing. You know, a really nice way to do this is by looking at PS ratios. And I'll just go over this again briefly. Apologies for anybody that was here last time. But what is a PS ratio? It's something that's used in TradFi a lot to value stocks, and it's also something that can be used in DeFi, because we have protocols that generate revenue in DeFi, right? So a P/S ratio, it's calculated as a blockchain's or decentralized application's market cap divided by its annualized, and this is a forward annualized revenue. It's a forward-looking revenue estimate that is calculated based on a simple day 30 moving average. Pretty cool shit, okay? So, back to Token Terminal. So I can come on here, and Aave is pretty much like the gold standard in DeFi, right? We know that Aave has extreme hype, extreme traction, tons of users, tons of media. Aave's the shit, right? It's been an outlier in DeFi performance for a while. When I say it's been an outlier, all that means is that it's outperformed all of the other shit in DeFi. All you had to do is just hold Aave for the last 2 months, right? And no matter what else you're holding, you'd probably be ahead of the game. So I can come here and I can look at something like Aave, and it's got all these really nice metrics for me. You know, I can check the TVL here. I can check the amount of volume relative to the market cap, you know, see how much it's being traded. I can take a look at the revenue, and I can actually track the revenue, you know, look for trends in this revenue. You know, is the protocol starting to generate more revenue? Is it starting to generate less revenue? Looks like they only started tracking it January 17th. But I would definitely say that, you know, that this is an uptrend right here, yeah? But the really interesting metric here is P to S ratio, and that's basically just based on the market cap and based on the amount of revenue this is generating, how is this being valued? And the P to S ratio here is 77.8. So if I was looking for value buys, if I was looking for things, you know, that are potentially undervalued relative to something like Aave, the gold standard, right? I could look for things that have a much lower P to S ratio. For example, let's come look at Keeper DAO. So Aave has a P to S ratio of about 70. Keeper DAO has a P to S ratio of about 7. So all things being equal, and remember, all things are not equal. Let me just be firm on that stance. All things being equal, though, I should be able to look at Keeper DAO and say, if all things were equal, the market cap of Keeper DAO would need to be 10 times higher than it is now to have an equivalent P to S ratio as Aave. So maybe potentially I'm looking at Keeper DAO at $700 or whatever, Rook, $700. Maybe potentially a fair valuation, an actual valuation, a target, if you will, could be Keeper DAO at $5,000, $6,000, $7,000. Maybe, what if? It's not a guarantee at all, but it's just a way of comparing two things on a relative basis and making investment decisions based on, you know, from a value perspective, what may be undervalued relative to something else. And you can look at all sorts of different projects on here, and you can compare those valuations on a relative basis. 1inch, for example, is valued at about the same as Aave right now. You know, maybe that shows that 1inch is at a pretty fair value. You know, so maybe I wouldn't be, you know, so eager to invest in 1inch if I was trying to buy something that has unrealized value, that has growth potential. You know, I could come look at something like Balancer. And Balancer has about a 70x P to S ratio. So on those same, terms, well, you know, maybe Balancer ain't the move here. You know, I'm going to continue looking for value. Let's look at something like Compound. Well, Compound has a 17x P to S ratio. So maybe, just maybe, Compound is undervalued relative to something like Aave. And that's a pretty good apples to apples comparison, because they're not the exact same, right? But I mean, they're both lending platforms. And Compound seems to be undervalued here. It seems to be undervalued relative to Aave, big time, right? So it's just something to keep in mind, you know, and this goes on and on. You can continue to look, you know, when I look at Hxro, the P to S ratio is 16. Definitely potential for growth here, right? Kyber, which is another one of my bags. P to S ratio is 24. Let's look at Curve. P to S ratio is 416. That's pretty fucking high, right? So just on a revenue basis, you know, maybe Curve could be a bit overvalued relative to everything else. Maybe Curve isn't the move. Just things to think about. I really, really like this tool. You can do so much with this, and it's a really, really good way to start thinking about this on an actual value basis. How much is this shit actually worth? And it's going to be worth whatever the market says it's worth at the end of the day, right? But the idea here is to identify what the market's wrong about and sell it when the market catches up. So I can also come here on the right. You can look at, you know, comparing apples to apples. I can look at AMMs. And there's a bunch of information on these AMMs, liquidity turnover ratios, right? Dodo, 1 inch. Pretty cool shit. Oh, I just wanted to point out that the only thing that's as undervalued as Keeper DAO. Wait for it. Is Sushi Swap. P to S ratio of about 9. So comparing apples to apples, you know, what would be a great comparison for us to make with Sushi Swap, right? Well, obviously Uniswap, right? So I can come look at Uniswap. And the market has valued Uniswap at a 17.62 P to S ratio. Now, maybe Uniswap's undervalued, but a direct apples to apples comparison, Sushi Swap might need to 2x from here to have equivalent value to Uniswap, which is a really interesting thing to think about and a really interesting way to invest. So if I can come here and I can look at revenue, this is a really cool dashboard. You can look at all of these projects here, and you can see the revenue, 24-hour, 7-day, 30-day. A lot of times people will say, well, why is the 24-hour revenue 0 and 1 inch or something like that? Well, it's probably just due to when the snapshot was taken. But I've got everything here, and I can see that over 30 days, Uniswap has almost $100 million of revenue. That's huge. But Sushi Swap has $40 million of revenue. That's also huge. But based on the amount of revenue Sushi Swap's generating, and based on the actual price of Sushi Swap, maybe Sushi Swap should be priced a bit higher. What's Sushi Swap at right now? Let's have a look here. Sushi USD. Let's take a look. So Sushi Swap sitting here around 17 bucks. Maybe Sushi Swap should be in the $30 range. I think so, actually. And you know, you can use these metrics to start thinking about things within reason. You know, I might look at this chart, and just based on the chart, I might say, well, whoa. You know, this has gone up a lot. I'd never buy this. But the market has already decided that Uniswap at double the PS ratio is rational, is worth that. So why wouldn't the same logic apply to the Sushi Swap chart? Why couldn't Sushi Swap double from here? And you can use this data to augment your charting, your investing decisions, things like that. Which is really cool. Somebody says Sushi's going to 60 bucks this year. I think you're right. I'm going to say 40 conservatively. Okay. I'm going to say 40 conservatively, but it starts adding like some order to this chaos. It starts helping you think about, you know, relative valuations, and it starts helping you think about that in our current market, what has the market already decided, already validated makes sense? And then you can apply that logic that's already been proven, that's already been validated to other things. So really, really interesting, okay? But seriously, look at this. You might have people that look at sushi right here and are just like, man, I would never buy that. But you've got smart fucking people that look at this and see opportunity and that see, you know, a path to more upside that's already been proven on the market. So something to think about here. Back to these 30-day revenues. A lot of these projects are kicking ass, you know, and we're looking at Ethereum and Bitcoin, right, in terms of fees, right? Fees paid to the network. But I can come in and, you know, and I can look at all sorts of different things. I mean, Compound is making a dog shit ton of revenue. Look, Compound's generated $22.5 million of revenue over 30 days. And then I come look at something like Aave, which has generated $7.5 million of revenue over 30 days. Now, that's still a lot of fucking revenue, right? That's a shit ton of revenue. But you have to start thinking to yourself, I mean, wait a minute. Compound, okay, let's check this out. Compound, at a $2 billion market cap, is producing $22.5 million in 30-day revenue. And it's the lending vertical. Now, Aave, at a $5.7 billion market cap, is producing, what do we got here? $7.5 million in 30-day revenue. Something isn't adding up here. This doesn't make much sense, does it? So you give me some money right now and you tell me you have to choose to invest in either Compound or Aave right now. What's it going to be? Well, I'm going to invest in Compound. Because I think that based on what I'm seeing here, Compound has significant upside relative to Aave. Significant upside. Start looking at 30-day revenue, and you see Hxro has $7 million in 30-day revenue. And Hxro is a $170 million market cap project. So Hxro has as much revenue as Aave over a 7-day period of time. And all that revenue is going 100% to stakers. That value accrual is going to stakers, right? So I'm looking at this and I'm like, wait a fucking second. So you're telling me that Aave generates $7 million of revenue over a 30-day period. Hxro does the exact same, and Aave is worth $5 billion, and Hxro's worth $170 million. Like, what the fuck are you smoking? Like, there's a clear mispricing here, right? I mean, a very, very clear mispricing. And then you know, start looking at this shit, okay? You start looking at shit like Keeper DAO. We've got a 30-day revenue of almost $10 million here. I'm gonna look at Keeper DAO on this, and we're looking at a $250 million market cap, okay? 800 million FDV. You should actually consider the FDV as the correct market cap here. Okay. There's a lot of team tokens and shit like that you know, we won't include in the actual circulating market cap. So this is accurate in a sense because, you know, this is the amount of tokens that are in the hands of people like you and me. You know, that aren't in the hands of Alameda, that aren't in the hands of people like that, you know. So interesting to think about. But let's just call it an $800 million market cap, you know, so we don't get too outrageous here. But at an $800 million market cap, we're generating $3 million more revenue than Aave, which is valued at $5 billion plus. And we've got an important point that's been made in the chat, and this is what I was getting to. it's not just all about revenue. It's about token economics, how the revenue is tied to it. You know, which is certainly true, right? That's certainly true. So when I talk about PS ratios, and I talk about, you know, comparing PS ratios, you compare them on a relative basis, and that means all things being equal, you know, this is undervalued relative to that. But there is more to it. You have to start thinking about, well, what's the inflation like? What are the token economics like? Is, you know, the protocol is generating this revenue, but is that revenue going to the token holders? You know, is that actual revenue? Is that value accrued? You know, how is that revenue being distributed? And those things are important too. And there's really no like concrete example of exactly how to make everything equal here. You know, a lot of this is very subjective. You know, you have to have a deeper understanding to really get into the nitty-gritty of it to say that on all things being equal, Compound and Aave, Compound is extremely undervalued, but based on all these other things, you know, maybe it's not. Right? But to keep things very, very simple on a relative basis, this is a really cool way of looking at everything. Now, I was just told altcoins are getting decimated, right? Which is, we're gonna have a look at that right now. I wouldn't exactly call this altcoins are getting decimated, you know? What's going on in the Bitcoin world? Oh, well, Bitcoin's breaking back down. It's not that altcoins are getting decimated here, I don't think. It's just that this is going down. Ethereum's going down. You know, we're really going to be looking for Aave to hold support right here at $440 or so. You know, that's the level of interest. We actually had a really, really big down move in altcoins yesterday, and I'll talk about that briefly. Peak to valley, when I say PV, that's what that means, peak to valley. How big was the move from the top to the bottom? Aave had a 34% PV move yesterday. A lot of altcoins did, and this scared the shit out of people. You know, but what actually happened there? Well, as I was discussing at the beginning of the stream, you know, derivatives trading's become much, much more popular. You know, you've got guys posting these ref links. You've got guys talking, you know, posting these P&Ls, these ridiculous I'm 1,000% up. You know, it's so easy. Click my ref link. It's not. Use my ref link and get wrecked. So when I get wrecked, it doesn't hurt me as much, right? Lame. But so many more people are leverage trading now. They're margin trading. They're coming in. They're, you know, they're longing their longs. They're getting balls deep. They're using cross margin. And what's actually happening, and what you see right here, was an absolutely enormous. There was like $1.5 billion worth of liquidations on this shit, I think. To where all of these people, and we're talking maybe people that have gotten rich longing their longs, longing their longs, longing their longs. You know, I had $5,000. I'm a fucking genius now. Now I have $200,000 up here. You know, I'm on leverage. This is going to go up, and when it goes up, I'm gonna be worth $2 million, and I'm a genius for doing that. You know, these same people are longing their longs, and well, guess what? They got blown the fuck up right here. Can you imagine successfully trading something like Aave for months and getting greedy and getting blown up? You know, before presumably it decides that, hey, it's time to level up again. You know, when Aave decides to level up again, this is what we're looking at up here. This is the next GAN target. So somewhere around 900 bucks. That's significant upside. That's about a 2x from where you're at right now. Why do you need leverage when something's going to go 100%? It makes no sense to me. It makes no sense. But you know, people get People got greedy here, and Aave is not the only example of this. There's other examples too. Sushi for one. If you come look at Sushi, you had the same thing. Peak to valley on Sushi, about 30%. A lot of people got blown up here. All of that, all of those gains, all of that successfully trading. You're gonna make it, and then you got greedy, and now you have $0 because you got liquidated. I mean, it's honestly unfucking believable, but that's exactly what happened here. Blown the fuck up. It wasn't just Aave and Sushi. I mean, there's a million things we can look at. But see, the point I'm trying to make is that with altcoins, I don't need leverage. Why do you need leverage to, you know, to amplify gains on an asset that's going to go 500%? You don't. You know, the odds are that you're not the guy that's going to, you know, leverage trade $5,000 into $1 million. I mean, they're very stacked against you, and if they weren't, everybody would be doing it, right? And it'd be easy, and it wouldn't be something that could, you know, just wouldn't make sense. You don't need leverage to trade this shit, guys. It already moves plenty. It's already plenty volatile. So just something to think about here. When you do have a mass liquidation event like this, you know, one of the upsides to it, you know, is that all of this leverage gets blown up, and the open interest decreases by a lot. So a lot of times a liquidation, a big liquidation event like this paves the way. It opens the door for further upside. Take a look at Compound here. I mean, people even got blown the fuck up on Compound. What are we looking at here? Peak to valley, 30%. Yeah, people got blown the fuck up on this. Really unbelievable. Let's look at some higher time frames. You know, you're gonna want to be paying attention to these daily closes. You're gonna want these daily closes to close like this, to close bullish. You know, we blew up all the leverage. We came back up. You know, the market normalized, the market stabilized. Now we can resume up only. Look at Sushi. Let's check out that daily. These dailies are just going to be closing in, it looks like 2 hours from now. Sushi daily is quite good. That's extremely bullish. You know, entry for Sushi. Looking at somewhere, you know, maybe around the $16, $17 range. I'd be super bullish if Sushi managed to close with this new high up here. Aave. Oh. Once again, you know, massive pin bar, whoop, giant wick to the downside, retrace the entire move. I'm really going to be wanting to see Aave close somewhere in this area. It'd be nice to see this candle actually close bullish. But you can see, you know, a similar event that happened on Aave, you know, right here on the 7th of February. You know, you see these people got blown up on the daily, right? And what happened after they got blown up on the daily and we, you know, closed with this giant pin bar? You know, well, we got more upside. The issue after this is, you know, either we didn't blow up enough people or people got mega greedy and decided that we're gonna put on a lot more risk here, and that we're gonna max out that leverage. So we blew them up again. But these, you know, they're blown up. This is going to open the door to more upside, which is good. So we're watching these daily closes, you know, for anything that you're eyeing, you know, that you're thinking about entering. I want to take a look at the Ethereum Bitcoin chart. Ethereum Bitcoin, we're waiting for this weekly to close. This is the volume weighted average price for the history of Ethereum Bitcoin going back to July 2017. A lot of people won't even consider really entering something until it clears this volume weighted average price. And you can see that the VWAP acted as resistance here during DeFi summer. And now we're working on a support resistance flip of that volume weighted average price. You know, I'd be very, very bullish on altcoins in general. If we could manage to close this weekly out on Ethereum above the VWAP, you know, some kind of bullish candle structure here, I think would pave the way to additional upside on Ethereum. Now, the real question is, how much is this going to go up? Put it on log scale. Whoop. There's definitely resistance here. You know, you can see it on the chart. Also support resistance flip of just these levels, you know, here, not just the VWAP. But this chart is super, super, super bullish versus Bitcoin. And this isn't looking like a top to me. So when we talk about robbing the bank, right? You know, we talk about how long can you rob the bank? How much time, how much money can you get away with? You know, looking like at stuff like Ethereum versus Bitcoin is really important, because if I'm looking at Ethereum versus Bitcoin and I'm seeing like really, really bullish signs on this chart, you know, I'm seeing really bullish structure, you know, which is something that I am seeing here. It's a good sign to me that, you know, maybe, and this is the weekly chart, right? This is a high time frame. Maybe over the next couple of weeks, months, maybe Ethereum stands to outperform Bitcoin. And what's another way to frame Ethereum outperforming Bitcoin? Well, there's a lot of people that call that alt season. So if I'm looking at, you know, the weekly time frame, high time frame structure on Ethereum versus Bitcoin, I think the next major level is going to be up here around 0.054, some change. And this is just a conservative level. Like, we could definitely just bust through this and continue to the upside, right? But conservatively, why would I be heavy exposed to Bitcoin right now when it's looking like conservatively in the next couple of weeks, months, Bitcoin or Ethereum could outperform Bitcoin by about 40%, conservatively. You know, and maybe it outperforms Bitcoin by even more. You know, maybe we're going to outperform Bitcoin over the next weeks, months by 100%. Now, that doesn't mean Bitcoin is going to dump at all. It just means that right now Ethereum is the better play. It's looking like Ethereum is going to outperform Bitcoin. By how much? Who knows? But it's looking like it will. Maybe 40% conservatively, you know, 120% on the high end. So how much more time do we have before the cops show up? How much more time do we have to rob this bank? Well, based on this, it's looking like we've got some time here. It's looking like that there's really nothing to be concerned about yet. You know, we're not at these major levels yet. You know, we're looking at a bullish structure, support resistance flip. It's looking like that Ethereum could really outperform Bitcoin. So considering that this is a weekly chart, how many weeks is it going to take for Ethereum to hit these targets? Here? Here. Well, that's how long alt season's going to last. You know, maybe it hits this first level in a month. You know, maybe it takes 2 months. Maybe it takes 2 months to hit this level. But if you want a clear indication of when it's actually time to rotate, you know, You don't look at Bitcoin dominance, BTCD. That's so fucking stupid. You just don't. You look at Ethereum versus Bitcoin. And you look at these important levels on Ethereum versus Bitcoin. And you start asking yourself, am I at one of these levels yet? No. So I don't need to be thinking about rotation yet. Maybe a good way to play this is, when we get up to this range, maybe you go ahead and start rotating a bit. Maybe you rotate 50% of your shitcoins to Bitcoin at this level and have that Bitcoin exposure. Remember, Bitcoin, this doesn't mean Bitcoin's bearish. Bitcoin's bullish. Bitcoin can go up while this is happening. So it's not like by being, exposed to Bitcoin at a certain point, by rotating exposure to Bitcoin, it's not like you're going to miss out on anything. It's just a smart thing to do. This isn't going to last forever. How long is it going to last, though? That's the $1 million question. So the way I'm going to play it is I'm watching these levels here, and I will start rotating to Bitcoin here, and I will heavily rotate to Bitcoin up here. Heavily, big time, mega rotation to Bitcoin. Mega rotation to Bitcoin up here. And then I can ride Bitcoin for another 3x, maybe another 50%. I don't know what Bitcoin's going to be by then. Bitcoin might be $80,000 by the time Ethereum gets up here. And if that's the case, I would be a little leery of rotating to Bitcoin. I'm not going to lie. But here's the thing. I really won't care about, missing out on a Bitcoin rotation at that point, because if Ethereum is able to outperform Bitcoin, by 120%, and Bitcoin has gone from $50,000 to $80,000, then, damn, I just made a lot of fucking money, right? If that's the case, then maybe I'll rotate a bit to Bitcoin, but the vast majority of my rotation would likely be to stables. So it's just something to keep in mind, and there's a lot of people out there that get offended when you say that Bitcoin dominance is a garbage metric. But Bitcoin dominance is a garbage metric because Bitcoin dominance continuously accounts for new things that contribute to the altcoin market cap. So Bitcoin dominance could be going down just because new shit is arriving on the scene. We know new shit is arriving on the scene right now. It's an absolutely terrible metric. And even more terrible when you consider that all this charting stuff is comparing things on a relative basis. So I can say that, oh, this is a really important level for Bitcoin dominance, and it might look that way on the chart. But the reality is that's fucking ridiculous. That's a ridiculous thing to say. Because all things aren't equal for Bitcoin dominance now, between now and a year ago. There's new shit in that metric now. So how can I say that, 60% dominance, that's strong support? I can't. Because I'm not able to compare them on equal terms, right? So throw Bitcoin dominance out. Fuck that shit. Do not use Bitcoin dominance. That is the dumbest fucking metric I've ever seen in crypto. When people talk about it, I honestly cringe. The only thing you need is Ethereum versus Bitcoin. You can compare Ethereum versus Bitcoin on a relative basis. I can compare this level to this level because I just can. It's Ethereum versus Bitcoin isn't something that's, there's 10 new versions of Ethereum now that are being accounted for. Ethereum versus Bitcoin is Ethereum versus Bitcoin, and I can look at what Ethereum versus Bitcoin was like back in 2017, and then I can look at what Ethereum versus Bitcoin is like now, and I can make the assumption that, at this level, there's going to be some resistance, right? And I can make the assumption that at this level, there's going to be some form of resistance. Right now, Ethereum is the move. Ethereum is looking like it's going to outperform Bitcoin. So even if you're a big Bitcoin bull and you hate Ethereum, Ethereum's the dumbest shit in the world. Fuck Vitalik, right? From a pure performance perspective, what if you could outperform Bitcoin? I mean, that's why you're here, right? What if you are a Bitcoin maximalist and you're just like, yo, I can hold Bitcoin and I can be exposed to that upside, or potentially I can get an Ethereum, I can get exposed to that same Bitcoin upside, I can get more upside, and then I can sell it all back to Bitcoin, and I can still be that Bitcoin guy. I can still be that Bitcoin maximalist. It's just something to think about. So Odin Agro says, Ethereum might suck up all the altcoin liquidity when it gets going. I disagree with this. I don't think that's going to be the case, because I do think that there's a lot of shit, especially when you look at mid caps and stuff like that. There's a lot of shit that really hasn't moved that much. And just like I can compare Ethereum to Bitcoin, right? What I should start doing is comparing these altcoins I'm in to Ethereum. Because the idea, if you're in altcoins, is Ethereum's going to outperform Bitcoin, so I'm going to need to outperform Ethereum to make being in Ethereum worth it. So I should definitely look at these altcoin charts too versus Ethereum. Not versus Bitcoin. Look at them versus Ethereum. Ethereum, is a base unit of liquidity now for a lot of these altcoins. A lot of people are looking at things versus Ethereum. So I think that's something that's important to look at. Let's see. Compound Ethereum on Huobi. So I'm looking at this compound versus Ethereum chart, and we've got early signs of an uptrend, but we're still below this volume weighted average price. We still haven't cleared this level. I'm not seeing any indications of a strong uptrend, other than we've had this impulse up. It has outperformed Ethereum. When is this really going to start outperforming Ethereum? The idea here is that I'm in altcoins because I'm trying to outperform Ethereum. If all the altcoin charts just ended up looking like this when it was all said and done, then what's even the fucking point of this? What's the point of altcoins at all? That's why I think that, Ethereum isn't going to suck the liquidity from the altcoins. Ethereum is going to break a lot of these altcoins out versus USD. In ancient altcoin wisdom, a lot of times US dollar breakouts precede breakouts versus these base liquidity units. They bring in the momentum that it takes to break compound out versus Ethereum, for example. So KNC, versus Ethereum is another one of these that I'm looking at. I mean, as far as I'm concerned, here's the VWAP. This is at a historical support level versus Ethereum. We've got the Willy embedded. We've got this cross step. This is high time frame. As far as I'm concerned, this stands to outperform Ethereum. And an interesting piece of supporting evidence would be this US dollar chart. And I come look at this US dollar chart, and I see that a lot of those charts versus Ethereum, kind of look like this right now. Right? They kind of look like that region. But I've got a breakout on Kyber network versus US dollars. And a lot of times that's a good sign that, we're going to accelerate, we're going to gain momentum, and then we'll break out versus Ethereum, and then things can really accelerate. And these US dollar charts can start looking like fucking insanity. Just solely due to the fact that we're outperforming Ethereum, Bitcoin is going up versus the dollar, and Ethereum is outperforming Bitcoin. That's a good way to think about it. We're talking bubbles here. We're talking major bubbles. Parabolic. Okay? Parabolic. If your chart is not outperforming Ethereum, then you should just be in Ethereum. And for some of you guys here, being in Ethereum is a smart move. I think, you know, Ethereum, if Bitcoin can go $30,000 up to, you know, over the next couple months, and Ethereum can outperform Bitcoin, that's a lot of upside there, you know? There's a lot on the table. There's a lot for you to take. It's good shit. But keep that in mind. Look at these charts versus Ethereum. Let's look at another one. I've kind of been eyeing Bancor recently. Bancor's looking quite nice. I haven't purchased any yet. Same story though. You know, I might look at this and I might say, wow, you know, Bancor went down to 60 cents and now it's at $3.40. Wow, that's great, right? Well, we've got this new high, you know, versus the dollar. Tons of bullish stuff coming. But how's it looking versus Ethereum? Well, check this out. So we've got early signs, you know, of outperformance, that Bancor is going to outperform Ethereum, you know, which is quite nice. That's something that I'm interested in seeing for sure. 100%, right? So the early signs are there. We've got that Bancor breakout versus the US dollar. So with momentum on that US dollar pairing, this chart versus Ethereum starts looking more appealing. And once again, you know, you've got this condition where, you know, all of the oscillators are in oversold conditions. You know, we've got early signs of a bullish reversal versus Ethereum. So you start thinking, you know, like, well, you might think that something like a Bancor has gone up quite a bit. You know, oh, you know, I don't want to buy top, right? I don't want to be that guy. But then you start looking at the Ethereum chart, and then you start looking at Ethereum versus Bitcoin, and then you start considering that Bitcoin's bullish, and it really starts to just click. It starts to make more sense. How much more upside is there? You know, how much can I squeeze out of this?
Never really saw you come in until you turned me around.
The MPH has zero coupon bonds launching, which, you know, nobody else in DeFi has done yet. MPH is fixed rate lending and floating rate bonds. Really cool. The floating rate bonds actually allow you to purchase or allow you to leverage long the interest rates on these lending platforms, which is super cool. Let's see here. What are we trying to look at here? MPH. So just like anything else, you know, I'm going to be looking at MPH. And this to me is just, you know, reaccumulation. Draw some trend lines here. MPH tried to break out a couple days ago, but people sold into the breakout really hard. You know, to me, the only thing that means, it's a good indication that we still need to shake out some more weak hands. And notice that we're still respecting this kind of range up here. But I'm watching this, MPH versus the dollar. You know, what breaks it out to the upside? You know, is that Ethereum pair going to be the thing that breaks it out? Is Ethereum going to 2,400 going to be the thing that breaks it out? When I said earlier, you know, that Ethereum versus US dollar momentum is going to break a lot of this shit out, what I meant is that Ethereum appreciating versus the dollar, a lot of these charts are going to break out versus the dollar as well. And then a lot of them are also going to break out versus Ethereum. That early dollar breakout, that's a good indication. So I can start looking at 88 MPH versus Ethereum. And this is what we're looking at here. You know, had this fake out, people sold into it really hard. You know, it obviously wasn't time. But I can't imagine anybody looking at this chart and saying that this asset is topped out, you know. We spent so much time distributing in this range. You know, we dumped down, we came, we reclaimed, big support resistance flip here. And now we're reaccumulating, you know, above this previous distribution range, which is super bullish, you know, in terms of price action. So, you know, I'm going to be watching MPH, you know, and fortunately, a cool situation here is that we've got this strong horizontal support level. And then we also have this diagonal, you know, which is really important too. So I start looking at this and I can start, guessing, well, how much time, do we have before this actually makes a move? Well, let's say it waits to the last fucking second to squeeze itself out. Well, we're looking at, sometime in about 2 weeks. But, it can pop out and pop off at really any time. I mean, the real question here is did we spend, did we spend an entire month in this accumulation range to only come up to this next target, to only do that? I don't think so. And you'll see this as well. We spent a month in this accumulation range. As these trends continue, they accelerate. As people with high conviction are separated from people with low conviction, as people get shaken out in these ranges. So what you'll start seeing is, maybe this comes up and when we get to this next level, this next resistance level, we will get there. Oh, fuck, wrong tool, hold on. Maybe we only spend 2 weeks here. Up, 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 up. And then maybe we go up again. Now, in a lot of these altcoins, you're going to see 3 pushes, 3 waves of upside. This is wave 1. That's wave 2. Wave 3 is the most parabolic of the 3 waves. That's another good way to look at things and decide, when it's time to go ahead and walk, when it's time to get the fuck out of Dodge. I can start looking at something like Rook, which has a really, really nice chart versus Ethereum. And you can see a similar concept to what I just discussed being demonstrated here. Here's wave 1 for Rook, right? Or, hold on. I'm just going to use the drawing tool. Oh, wave 1 for Rook. Amazing, right? After wave 1, we spent about a month separating high conviction holds from low conviction holds. We let people get shaken out. We got rid of the weak hands at this price point. And now Rook is on wave 2 at a presumably 3. I don't know where this wave 2 goes. But let's just assume, same situation with MPH. I would imagine that we spend less time here separating high conviction from low conviction. And then the third wave at some point. Now the third wave goes up, people get really greedy here. Maybe we spend a week here distributing. And this isn't separating high conviction from low conviction now, this is separating smart money from dumb money. It's kind of a different ballgame. Yeah, MPH could very well be going over $1,000. I agree with that. Very bullish on MPH. MPH is revenue generating protocol, just like anything else. Now, I also wanted to add that, a lot of times things will go more than 3 waves. But 3 waves is a good benchmark. Majority of times, 3 waves and done. 3 waves to the upside, and then we're going to have a corrective phase. And, sure, maybe we do continue up. Maybe this is one of those double bubbles like we saw in 2017, right? But after 3 waves, typically you're going to have a corrective cycle. And sometimes it can go 4 waves, 5 waves, but a lot of times, even then, at 3 waves, you made a lot of cash, you made a lot of dough. So it doesn't even make sense to stick around for, an extra, 2-3x when you're already up fucking 20x? What kind of sense does that make? Rotate from that high risk, rotate from the potential to lose your 20x, your 30x, down to something that hasn't gone 20x, 30x, something that doesn't have, maybe that same downside risk now baked in. That's the smart thing to do. So a couple of people have been asking about Badger. You know, we are going to tie things up here pretty soon. You know, I think that that we've talked about enough this episode. Here's the Badger fan. When I draw these fans, I draw them on linear. They don't work as well on logarithmic. You know, this is the level of interest here. You know, of course, we had some capitulation on Badger. Badger was an early runner for alt season. You know, when you start thinking about Badger and just how far it's come, you know, you can look at the bottom to the top, and Badger went 1,350%. And it's not that Badger doesn't have more upside. You know, it absolutely probably does. But not everything goes up forever. You know, Badger was due for a correction. What's a solid correction level when it comes to altcoins? 30 to 40% from the top, and you're going to see new buyers get interested and step in. So Badger, we have a 45% peak to valley. I'd say this is certainly enough to, you know, separate any weak hands, people with low conviction, etc., etc. And this certainly paves the way for us to reclaim this and make our way up to 150, 160 bucks, something like that. You've got to remember, though, think about it like this. Talking about it in terms of who's willing to sell. I'm going to blow all this away just so we can demonstrate this a bit easier. So who's willing to sell? How many people are willing to sell Badger at 230%? Right? Well, not many. How many people are willing to sell at 400%? How many are willing to sell at 1,400%? And actually, you know, I hadn't chosen a proper bottom earlier. How many people are willing to sell at 1,600%? You know, the higher we go up, and when I talk about, you know, rotating from high risk to low risk, this is all I mean. The more multiple something goes, the more willing to sell people are going to be. Because they've already gotten their pound of bananas, right? So you have to start thinking, you know, okay, well, this is going 1,600% here. There's for sure going to be people that say, hey, Badger was an early runner. I can take that 16x and compound it into plenty of other things. I can reduce my downside risk, and I can gain exposure to maybe 3-4x, you know, in other places, right? The more x's up something goes, the more people are going to start thinking, I'm willing to sell and move on to something else. So if you're in something and there's an early runner, for Badger example, you know, I took a ton of profit in the $80 range on Badger. But it wasn't because I don't like Badger. It wasn't because Badger is stupid. It wasn't because I don't think Badger can keep going up. It was just because I looked at Badger and I thought to myself, well, hey, you know, I've got a lot of X's here. I think I'm willing to take that profit. And I think I'm willing to rotate that profit into something with potentially lower downside. You know, which is the smart thing to do. Move from high risk to low risk. Because if you're looking at something like Bancor, for example, and I see Bancor is up from the bottom right now 500%. Well, there's going to be less, you know, people willing to sell on something that's 500%, right, than there would on something that is 1,600%. That's just the facts, the simple facts. Yeah, we can look at Hxro versus Ethereum. Let's see here. Shit'll ever load. Hexric has already broken out versus Ethereum, which is quite good. You know, it's quite nice to see. And what you're seeing right now is a support resistance flip. You know, we broke out through the diagonal. We jumped back down to the diagonal. It's not confirmed yet, but what we're actually looking for is for this diagonal that was resistance for so long, right? We'd really like to see this diagonal now act as support so we can pursue further upside versus Hexric. You know, where's the next levels? Well, you know, this right here, we've got to clear this just in terms of a horizontal level. And, you know, hopefully it does, but what if Hexric did this for a while, right? And then went up big time. I mean, that's definitely a possibility. Don't ever rule anything out. You know, but the main idea here is that we've had this SR flip. Hexric is undervalued. In an ideal world, you know, Hexric can break this horizontal resistance versus Ethereum, SR flip that, and then Hexric can come and tackle the final boss. But Hexric really hasn't even had one wave up versus Ethereum yet, which is really interesting to think about. And that's one of the reasons why it's so appealing to me, is because, you know, what if this first wave, you know, was like that? You know, Hexric stands to potentially gain a lot versus Ethereum. I just don't know on what time frame. All I know is that it's undervalued. The TA looks good. So I'm going to be watching that. And another important thing about Hexric is actually on Binance. So I can start looking at Binance. I can also draw this other channel. This is kind of a broadening wedge on Hexric. And I'm watching for, and you can see exactly where Hexric was rejected. I really, really want, and this is the volume weighted average price. I really, really, really want Hexric to find support here and do this. So I can look at Hexric versus the dollar for signs that that's actually about to happen. And unfortunately, just like MPH did, Hexric decided that it was going to fake out here. So now versus the dollar, we're looking at around 40 cents as support for Hexric. And a clear sign that Hexric is about to boogie and that Hexric is going to outperform Ethereum, and maybe that Hexric and Ethereum chart can start seeing some upside and can break out, would be this Hexric versus the dollar chart. You know, actually SR flipping right here. I'd like to see Hexric between $1 and $2. I don't think that's too much to ask for. That's pretty conservative if you ask me, considering what it is. MTA. This was clearly wrong. That's what I would have liked to see. But look at how much, and this is an interesting one because of all of this history that we have, you know, that we can derive future levels from. But what we're seeing right here is, you know, MTA appreciated versus Ethereum. It reached this first zone. It was rejected. But if you look at the next zone, you know, versus Ethereum, and maybe MTA tops out here, maybe it doesn't, you know, we're looking at a 200% upside here, right? Versus Ethereum. And if Ethereum stays exactly where it is right now and MTA is $4, then, you know, that would put MTA at over $12. You know, that would be a new USD all-time high. So, you know, there's a lot of upside potential here for this, and you know, we can even take a look at things like GAN fans and stuff right here, just to get perspective on where this could be going. And you can see that MTA has found support, you know, at the lower bound of this GAN fan. And we can use these GAN fans, and this isn't a GAN fan episode, so I'm not going to get into all the whys and the hows and the ifs. But I know this is the next really big challenge, the next, you know, really big level for MTA, just in terms of Ethereum, and I can use this to start thinking about when it might get there. Because presumably this horizontal would also be intersecting with one of these GAN angles. So what are the odds of it doing this move by March the 3rd? Well, I'd say pretty low, but this is still on the table for now, right? So that's one of the possibilities. What are the odds of this intersection occurring right here, the next one, at the end of March? Well, I'd say those odds are pretty good, right? So I can start using this to go ahead and think about the how. You know, what is this going to look like? How is this going to happen? You know? How is this going to work? You know? How is it going to fucking work? End of the day, though, you know, and if I'm looking at a pure GAN base bubble Moon Boy target, the Moon Boy target is this 1 out of 1 line. You know, another good target would be this 2 out of 1 line. And then I start projecting and I start looking at what this could look like come April, May. Well, shit, you know? Can you imagine that versus Ethereum being here or somewhere up here even in just 2 or 3 months time? It's hard to imagine, but you got to keep your imagination open. You got to consider the possibility. You know, the absolute hardest thing to do here is not selling too early and not selling too late. And unfortunately, there's a lot of people here that are going to sell too early. And it's going to be sad. It's going to be sad. Don't sell too early and don't sell too late. But also, don't come at me and tell me alt season is over when I've got charts that look like this. You're telling me that we have exchanges like Kraken getting 5 times their all-time high signups in one day, fucking crashing the site, them having to shut down access to the site, and you're telling me that that was all we're getting here? Like, get fucking lost, pal. We got stimulus checks on the way, hitting in the middle of an alt season. What do you fuck do you think these guys are gonna buy? They're gonna buy our shitcoins. They're gonna buy our bags. Now, one really interesting thing about Meta, okay? A big concern of a lot of people's in regard to Meta is the emissions. So, Meta actually hit a really interesting inflection point just a few days ago. It's something that not many people were actually talking about here. And I think that the market will begin to reflect those new levels of emissions. If I can come look at the graph. Looking at MTA emissions right here. You can see very clearly that the emissions curve has now flattened. Just to illustrate this, hold on. So I've just copy pasted this into Paint, right? Just so we can kind of see actually what's going on here. That's been the emissions trend on MTA. And this is the new emissions trend on MTA. So that's a pretty significant decrease, right? And I do believe that's very favorable to MTA actually appreciating in price. If you look at where we're at right now, you know, this inflection point. Right, oh fuck. Or hold on just a second. Hold on. Because based on that, what I'm talking about is actually coming up in a month or two. Is there, maybe there's a new graph? Yeah, I'm not quite sure this is the right one. Okay, I'm pasting the update now. Apologies for that. And I'll have to source the location of this new data. Oh. But you can see here, what is this? January. Yeah, it looks like January is when the emissions curve began to flatten out. And we'll be on this trajectory, it looks like, until June. You know, when the emissions actually flatten again. So just something to consider there. Yeah, I mean, the emissions curve is flattening. You know, according to this, the circulating supply of MTA right now is about 25 million. I believe there's 6 million of that circulating supply that's actually locked up staking. Double check that. Yeah, there's currently 6 million of this circulating supply. So let's say 6 out of 25 is going to be 6 times 4. That's around 25%, right? 25% of the circulating supply. But the emissions have flattened out. You know, we do have new token economics proposals on the way, which, you know, makes me super bullish on MTA. And there's also a buy and make proposal coming as well. You know, MTA released MBTC just a few days ago, and a new automated market maker that actually went along with MBTC and that's being trial run with MBTC. Now, over the coming weeks, I would expect the TVL of MTA to increase significantly. Right now, the amount of Bitcoin that they're actually allowing this new market maker is capped to 9, just so they can test and prod responsibly. And they're going to be scaling it up week by week, allowing just a little bit more, you know, allowing them to see how this operates out in the wild. One of the really interesting things about MTA, and I think meta assets are going to be huge, is meta assets allow you to provide single-sided liquidity for things that are pretty much one-to-one pegged to each other. For example, USDT and USDC. MTA provides market-making infrastructure for things that are theoretically one-to-one. WBTC versus REN BTC. And I deposit my liquidity, single-sided exposure, into these automated market makers, okay? And in return, my liquidity token is actually the meta asset that's issued, that MBTC, which is interesting. So then I can take that MBTC and I can actually stake that in one of their save products, and I can earn interest on it, from them lending it out, funneling it around. And in addition to that, it's composable now. So when I'm in a save vault, I would be issued, IM USD or IM BTC down the road. And I could actually take these interest-bearing tokens, composable tokens that are representative of my share in the interest-bearing vault, and I can use those to yield farm elsewhere. Just stacking yield on top of yield after, on top of yield. Really cool thing to do. Anyway, I think that is about all I have for today. Of course, are there more things we could talk about? Yeah, but I've been in here chatting for almost 2 hours now, and I think we've covered enough. That's enough information. Digest it, love it, learn it. Good luck to everyone out there. Manage your expectations. Don't move those goalposts. Don't use Bitcoin D, BTC.D, stupid. Best of luck to everybody. Until next time, adios. We'll see y'all later.